guess next we could just move into general state of the market right now. I wonder what your thoughts are on, a lot of people say, we're in a bubble right now. This is just like the dot-com bubble and burst. What do you think? Do you think we're in a bubble, or is it similar, or is this something totally different?
Honestly, I don't believe we are in a bubble. The the market is a little bit ahead of itself, in my opinion.
Hmm.
But when you say bubble, that's an extreme upside.
Right.
Dot-com era, the dot-com stocks, and at one time the biotech stocks, biotechnology, the farmers were in a bubble, because the famous words of former Federal Reserve Chairman Greenspan, irrational exuberance. And that was a perfect expression, especially in the dot-com era and bubble. I don't believe we're in a bubble today. I don't believe we have irrational exuberance today. We do have some sectors which are overly valued a little bit, and mainly that's technology. And my belief is that's the technology sector that is a little bit ahead of itself. One of the best things to look at to see if not so much as if we're in a bubble, whether we are overvalued, is something called a price to earnings ratio, or PE ratio, as we call it in the industry. And what that means is price to earnings, which means how much is an investor willing to pay for every $1 of earnings that the company produces, okay, of net earnings. So for example, if a company has a PE ratio of 25, it means that you as an investor are willing to pay $25 for every $1 in annual earnings.
Right.
Okay. Today, the PE ratio, I'm not too sure what it is in the market right now. I believe it's approximately 28. But one way of investing also in different sectors is, you can look it up easily on any good financial publication online, where they'll say, okay, so you look at Apple stock, for example, and it has a PE ratio of 35.
That's the one I was thinking of. Yeah.
Yeah, and yet, you'll see with some of the with some of these financial publications that the PE, it'll say at the industry PE ratio happens to be, I'm trying to look it up as we speak, if it tells this to me here. Okay, so Apple's PE ratio is just about 35, and it'll say the industry average is about 28. Right. So Apple is overvalued in that respect. Okay, right. So people are willing to pay $35 per share for every $1, $35 for every $1 of earnings. Mm-hmm. That's a good metric. How much are you willing to pay? Now, years ago, the PE ratio for the entire market was 15, 12. But what happens is over time, people get adjusted to paying higher PE ratios. They get adjusted to seeing higher PE ratios. 35 is a little bit high. Apple's PE ratio at one time was only about 12, and that was only about 4 years ago. Mm-hmm. And again, this is just an example. So the answer to your question, no, I don't believe we're in a bubble right now. You have to be selective and watch, what you like, and just do simple review and analysis.
Right. Yeah. And getting back to about the dot-com, dot-com bubble burst. Obviously, I lived through it. I wasn't investing at that point, but yeah. Just from everything I've read, it seems like, I would agree with you that I think that was something totally different, irrational exuberance, where everything was based on hype and future growth and earnings. Yeah. Whereas now with, Apple, Amazon, Microsoft, these companies have, they might be a little overvalued, and they're heavily weighted, but they kind of are putting up the numbers to show it. Like I don't think
exactly.
as far.
Again, it's all based on what people perceive to be their future performance, their future revenues. And that's why they're willing to pay so much for every earnings. They're gambling on future growth.
Right.
Yeah.
And especially, you know, with tech being overvalued, but like it's overvalued, but, you know, ever since the pandemic started, I mean, these are the only companies that consistently continue to thrive or even done better in some cases, whereas everyone else is struggling.
Well, there's a reason for that, but we'll get to that later. But there's a reason why tech stocks, and I'll tell you what it is.